Good evening students, welcome back to my channel. Okay, so today I'm going to do the books of hire vendor. Okay, journal entries to be passed in the books of hire vendor. Okay, both the methods, that is full cash price method and asset accrual method, to record transactions in the books of hire purchaser I have done. Okay, today I am going to do the books of hire vendor. Okay, so you just see the journal entries. Entry on the date of agreement. Okay, so when both the hire purchaser and the hire vendor enters into the agreement, what is the entry? You see, hire purchaser account debited to hire purchase sales account with the full cash price of the asset. So on the date of agreement, what will be the entry? Hire purchaser account debited, because it becomes an asset for the hire vendor. Okay, the hire vendor is going to receive cash from the hire purchaser. So it becomes an asset, and we know when asset increases, it should be debited. To hire purchase sales account. Okay, because it's a revenue from the hire vendor. Okay. And transfer of ownership of asset does not take place on the date of agreement. Okay, only the asset gets transferred. Ownership remains with the hire vendor. Okay, that is what hire purchase sales account is credited. Okay, it becomes a revenue for the hire vendor. Okay, he will receive periodical installments. So with the full cash price of the asset, the full cash price of the asset will be debited and credited. Then you see the second entry on the date of agreement for down payment received. So when the hire vendor will receive the down payment of the asset, okay, what will be the entry? Bank cash account debited to hire purchaser account. Okay, here cash is an asset, it increases, so it should be debited. Hire purchaser, okay, it is also an asset for the hire vendor. It decreases with the receipt of down payment amount. Okay, so it should be credited with the amount of down payment. Okay, then you see, okay, so then at the end of the first year, okay, if the periodical installments, okay, are made yearly, okay, on yearly basis, then at the end of first year, for interest becoming due, okay, you see, for interest becoming due, hire purchaser account debited to interest account. Okay, here hire purchaser becomes an asset for the hire vendor, okay, with the amount of interest. So hire purchaser account debited, asset increases, asset increases, so it should be debited to interest account. It becomes a revenue for the hire vendor. Okay, so it should be credited to interest account. Okay, with the amount of interest due. Okay, so with the amount of interest due for the whole year. Okay, then you see on receiving the periodical installments. Okay, so when the hire vendor will receive the periodical installment, okay, at that time bank/cash account should be debited to hire purchaser account with the amount of installments. Okay, so it is an asset, so it increases, so it should be debited. And again hire purchaser, it is also an asset. When cash comes in the hands of the hire vendor, hire purchaser decreases. Okay, so it should be credited with the amount of installments. Okay, then on annual closing of accounts, okay, at the year ending, okay, so what account is, you see, hire purchase sales account debited to trading account. Okay, this hire purchase sales account, okay, is transferred to trading account. Okay, this hire purchase sales account will be closed and it will be transferred to trading account. So what entry will be passed? Hire purchase sales account debited to trading account. Okay, to trading account. So with what amounts it will be debited and credited? With sales account balance. Okay, that is the full cash price of the asset. Okay, with that amount, okay, the hire purchase sales account will be transferred to trading account. Okay, now for transfer of interest. Okay, the amount of interest will be transferred to statement of profit and loss account. Okay, so interest account debited to statement of profit and loss account. Okay, here interest is an income for the hire vendor. Okay, so it should be written on the credit side of the profit and loss account. So we know for that journal entry will be interest account debited to statement of profit and loss account. Okay, and for depreciation no entry will be passed in the books of hire vendor. Okay, because depreciation, because the asset does not lie on the hands of hire vendor anymore after he enters into the agreement. Okay, it gets transferred to the hire purchaser. Okay, so depreciation will be calculated. Okay, journal entry will be passed on depreciation by the hire purchaser, not the hire vendor. Okay, now we see what are the ledger accounts prepared. Okay, the ledger accounts are hire purchaser account, interest account, and statement of PL account. Okay, so these are the three accounts which are three ledger accounts which are prepared in the books of hire vendor. Okay, hire purchaser account, okay, then interest account and statement of profit and loss account. Okay, so these two entries, okay, entry on the date of agreement and for receipt of down payment, okay, will be on the first date. Okay, that is when the hire purchaser and hire vendor enters into the agreement. Okay, the first date of purchase of asset, okay, of purchase of hire of asset on hire purchase system. The next entries, okay, will be on the year ending date. Okay, on the year ending date. Okay, so these are the ledger accounts prepared. Okay, and this entry on closing the sales account, okay, this entry will be passed only once. Okay, only once. Okay, that is the closing date of the first year. Okay, of payment of periodical installments. Okay, closing date of the first year. Okay, and for the subsequent years, okay, these entries for interest becoming due, okay, receipt of periodical installments and transfer of interest to statement of profit and loss account. Okay, only these three entries, okay, will be passed year after year in the books of hire vendor. Okay, and this account will be this journal entry will be passed only once. Okay, that is when the first installment is paid. Okay, year ending. Okay, in the first year. Okay, when the installment is paid. Okay, when the year ends. At that time, this entry will be passed only once. And for the subsequent years, these three entries will be repeated again again and again. Okay, and these two entries will be passed, okay, on the date of agreement. Okay, so I hope this is clear to you. Okay, journal entries and ledger accounts to be prepared in the books of hire vendor. Okay, if you like my video, please share and comment. Okay, and if you those who are new subscribers, please subscribe to my channel and press the bell icon for latest updates. Thank you for today.